Hey everyone, and welcome to the weekly review. Get started with SPY, and I have the Q3 open enabled here because it's one of the key levels. Let's turn on the other stuff, and we have previous week, this week, and July range. And let's zoom in on the hourly. We can see that we stopped at the previous week's high. This was the low of this week, and slightly below the midweek point. Nothing really uber bearish or uber bullish about it. We're in a clear downtrend now, and I expect to continue down next week. Question is, how low do we go? And based on my expectation, I think the target is the Q3 open. Multiple reason about that. We don't need this anymore, and don't really need the July range either, I think. Actually, let's leave the July range because I will use it to draw some stuff. Um, what I think will happen is we go to the July range. This is like 3%. And if we go below it in a meaningful way, like actually have a breakdown below it, the target then becomes to double the range. And that's going to be like 429, 430. And this is not exactly that value, but somewhere in this range between this low and this breakout point here. So if we drop and we go below that level, I think uh, we continue down and go here. This should be a very swift drop, like it should play out by the end of the week, maybe a couple of days into August at most. And this is the bearish scenario for this. And again, some of these levels are ranges, like here. This is the first stop on the drop, something like this. So this is the bearish scenario, but I don't think we get it. I think there's lower chance we get it. And for us to get it, we need earnings to be bad. I don't think the FOMC will matter that much. Expectation for FOMC, even if we get a hike, which we may not, is that this is the last hike. And the Fed would have to be uber bearish to scare the market, like also get the hike next week and basically say for sure that it's not the last hike, that we will get at least another one or two later in the year, which I don't think they will do. I don't even think we may get a hike next week. So the thing that will lead the market will be earnings. We have Google with the earnings next week. So Google on Tuesday, we have Amazon on Thursday, Microsoft on Tuesday, Meta on Wednesday, Apple is on next week, and some on Friday. And I think we need to get a breakdown in earnings to cause this. So my expectation is that we will go down to this level on by Tuesday not after hours, on the close, and then um, we get earnings. If earnings are bad, we get further drop here. It won't matter what the Fed does. It's the expectation that earnings will be bad, and that's the problem. But more than likely, earnings will be okayish. So I think we bounce here, and if we bounce here, I would expect we rally back up and close the week somewhere in this area here, like between 448 and 452. This is the level now, and that's kind of it. And the reasoning, I'll explain the reasoning for the, so basically we drop, we lose 450, bounce, backtest 450, we get rejected for 450, then we have another leg down, we get to this supply area, demand area, sorry, here, and then market will expect to see what happened. If we go bullish, we go bullish. If we go bearish, we go bearish. That's kind of it. But my expectation is that it won't be that bad for earnings. Um, okay, now this was the micro stuff, kind of the expectation for the week or the next week and a half, let's say. Uh, Now let's zoom out and look at the macro stuff. Don't need this anymore. Don't need this dot here. Daily. Let's invert this because I like my inversion stuff. Put back RSI. And don't need a Q3 range either. Actually, let's keep it. I might use it. So most people's brains aren't trained to spot tops. A lot more people are in the deep buying mentality and will spot bottoms as opposed to tops. That's why I inverted this. Let's invert the RSI as well. And what we can see here is, for example, on the December January top, we had this huge bullish bearish divergence, or bullish divergence because it's bearish. It's inverted, and we're getting the beginning of something like this as well. Now, with the current cycle, or no, with the Q3 cycle, what usually happens is the market tops at the beginning of September, plus minus 1 week, and then bottoms at the beginning of October, plus minus 1 week. For example, our October top, our bottom here in October was 12th of October. This leg down started in August, but it was actually it started from here. No, from here. It was the Jackson Hole thing. This was just a normal pullback, but after this we had a drop. So 1 week before September, 1 week and a bit in October. Then looking back before that, top was September 2nd, bottom was October 5th. Going back even more, top was September 2nd again, and bottom was, this one was a double bottom, so 30th of October. But the other one was September 25th. So beginning of September, plus minus a week, beginning of October, plus minus 1 week. And for us, let's say, let's put September 1st, and let's put October 1st. It's good enough, sorry. 2nd of October. And I said that this Q3 open is a big pivot because it's a big pivot because once we get below it, we will have a red quarterly candle. So this will become a red candle. It will be a week up and it becomes red. So the setup is very negative for going into the rest of Q3. So my expectation, if we don't hold on the Q3 open, is actually to go as low as this. So this is 415. So the playout for the drop would be something akin to this. and I think the drop would continue probably around here. So something like this. We drop, and I said we double this. So we go to 430. Then we go back up. We backtest this and get rejected. And we start dropping again. There are some stops along the way, but basically go as low as this for the until late September. And then we get a bounce and likely retest the highs by end of the year, something like this. So this would be uh, the bearish reaction for the next week due to earnings. We drop, we backtest, get rejected, and then continue down for the rest of the until for the rest of the quarter, basically. Okay, so this is one. Then the bullish version, in which we don't go below this, is like this. We go this, earnings are good, and we start going up again. Uh, then I think there's a good chance we go and see 470. 470 is the next level here. And good earnings will cause us to probably test 470 here. Okay, something like that. Let me redraw this. Something like this. Then this will cause the market to be extremely overextended. We will get quarterly expiration coming, and it will be extremely skewed towards the bullish side. And we begin the drop late August, early September, and we have a huge drop, probably to 440. Like we don't drop here anymore, we drop here. This will be a swift drop. We go here, and then again end of year rally, and then maybe we get the full cycle top. It's very similar to what we saw here, and we drop this, but we don't know yet. The thing that is more likely is, sorry, uh, like this. So bearish is if earnings are bad, we drop here, backtest, drop until the end of September, towards the end of September, then bounce and retest the high by end of year. Bullish scenario is earnings are good, we retest the Q3 open, we bounce up, and we go for 470. Then at the beginning of September, we have the usual quarterly OPEX big drop, and we go to 440, then potentially retest the highs by end of the year. That's kind of the macro side setup. And let's go back to inverter now. Uh, this this looks like a dip buy, I'm assuming. Even if it's not a dip buy yet, we we will have a small pullback like this. Let's say we drop here, we have a small dead cat bounce. The Q3 open as a horizontal level is an excellent level because we have this small top here to target. And then the next leg down, it's either uh, a small, slightly higher top here, or we go to 470. And I think 470 is a lot more likely than 460. Like if we see 460, I don't see why we don't see 470. And then the time runs out. We have a large bounce here. The thing is that we will break the uptrend. Let's say something like this. And this can be a deviation or it can be a bigger thing. It depends what will happen afterwards. So like this can be also this. This could also happen. It's a possibility. But we are too far away from it to even consider it. It doesn't matter if it happens or not for now. What's more important is that we would potentially go to 470 if earnings are bullish for mega caps. Okay, now with SPY out of the way, this was everything for SPY. Let's look at a couple of other things that happened last week. And we have oil potentially about to break out. I have too many things. And target would be this 85 thing here. Uh, It says 84-ish, probably 84 to 85, something like that. Yeah. Uh, it's becoming a bull flag. So I was having concerns last week because we had these two candles and it was looking like it might go down again, but this actually shaped up into a bull flag, and this is bullish. I think oil will go up. The thesis I explained in the um, macro video is more or less playing out. The only thing that isn't playing out is dollar, but oil and utilities is playing out. Another thing that happened is this is XLY over XLP. So XLY is what? Consumer discretionary. So this is Amazon, Tesla, McDonald's, I think, O'Reilly Auto, stuff like that. And XLP is consumer staples like Target, Walmart, Pepsi, Cola, stuff like that. And the XLI over XLP is a description of risk appetite. So when this goes up, it means risk on. When this goes down is risk off. And what we saw this week is a trend break. Um, we had a minus 4% candle after the uptrend. When you get a large directional counter directional candle in any trend, it's a signal that the trend broke. Like I can, for example, let's say here, we had a minus 2% candle, and then this uptrend was broken. What we got afterwards was a distribution pattern, like it went sideways, it didn't go up again. And right now we're also seeing this. So that uptrend broke. Now we will go into consolidation. Maybe we go higher later, maybe we go down later, but most likely we will see something like this. And if we go higher, it will have another leg up to the size of this. If we go lower, we will go lower here. And this plays out into the bearish scenarios or bullish scenarios that I explained for SPY as well. Let's go look at XLY itself. Same kind of thing, like XLY was minus 3% day, mostly due to Tesla and Amazon, but cannot contest this. Like when the trend, this is either the beginning of a new trend. No, actually not either. This is the death of the old trend, but it could be the beginning of a new trend as well. And in this scenario, it was sideways movement. But in this scenario here at the end, it was the beginning of a new trend. So one of the reasons why I am a bit more bearish is this. We got a trend break in XLY, and this is a big deal. Then we have utilities with a breakout. Nextra is the biggest name in utilities in XLU, and it had a breakout as well. It has earning next week, but this is kind of playing out as well. XLV, the breakout continues. There were some flows in UNH. Maybe it does a breakout as well. 550, I think, was the target. So we might see this playing out soon as well. For CRE, what I would like to see is a retest of this, turn it into a support, and then just go nuts. And this was buying the breakout here was not buying the breakout. Buying before the breakout was a somewhat risky, uh, I don't know, situation because you didn't know if they were going to break out because of earnings. But buying the pullback is a lot better. And I'm pretty sure they will turn it into a support if the market remains bullish, and they should go up and outperform moving forward. What was there anything I wanted to talk about? And this is, oh yeah, VIX. VIX looks more bullish than in the past. Like I was pretty sure we would get a pullback on this attempt higher, and we did. And we are keeping the bullish divergence here, making higher highs on RSI, and this going more like sideways. And what I expect is we will do a retest of 16 by Tuesday, and then based on earnings and FOMC, we will go for new lows. I think VIX goes below 12 this time. Anyway, the minimum it will retest this for sure, but Monday and Tuesday I would expect it to go higher. And why I think it makes a new low is because of gamma. Where did I put that one? Here. This is realized volatility, and it's breaking down. If I invert this one, it looks super bullish. Like it had this run up here, bull flagging, and now it looks like it wants to have another huge run up to, I don't know, 160. This is what it looks like. Like take this, double it, and it's like a breakout. And what I think will happen, meaning we don't get volatility, is Monday and Tuesday it tries to bounce here, maybe goes a bit higher and then gets rejected and drops again, and then it has the full breakdown that I expect. Again, the trigger will be earnings, not FOMC, not anything like that. FOMC just adds a bit more uh, the need for more protection for people to buy it. That's why I think we drop Monday and Tuesday. Yeah, that's kind of it. Yields not doing anything. I mean, they bounced a bit here, but depending on what happens on the FOMC, they can crater again and go down. Oh, and DXY. Another thing is why I think we get the rally scenario to 470 is I expect this to be a dead cat bounce. I'm not too confident. It doesn't look that good. Like we're getting to this resistance to the previous support level that is now resistance. We may go a bit above it, but I don't see this breaking out. I think this is a dead cat bounce, and we will go down. Maybe double test this, and maybe it holds, but maybe not. And then it it goes down. I think we for sure get a fake out here. Even if it holds eventually, I think we get a large fake out, do something like this, and then move up. Uh, and this should happen, I don't know, around in August sometime. I don't think it will play out quickly. But DXY and yields will depend on FOMC. If the Fed says that it's the last hike, and which I expect they do, maybe even the Fed doesn't hike, the dollar should crater, yield should crater, uh, but not in a spectacular fashion. I don't expect this to go here. Expect, like for example, 10-year to go to 3.3. So retest of this because yields are still high and they will remain high for the foreseeable future, something like this, and then maybe another leg up and so on. Yeah, that's it. Hope you guys enjoyed it. Have a good week and good luck. Bye bye.